Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Thick with you this morning. On today's show, we are talking about earnings from Spotify, Google after the bell today. There's no stopping Disney here. I guess this was to be expected following the record-breaking Avengers weekend. And Tesla, we'll talk about Tesla as well. They were in the news. They snuck in some headlines on us Friday after the bell. And this morning, they released a 10Q. And we'll talk about Walmart reacting to Amazon's news last week. Our guest today, joining us at 8:35, is Zohaib Rahim, who's going to preview for us the monthly auto sales that's coming on Thursday. He's an analyst at Cox Automotive. Joel, what is the word here overnight?
Nice range overnight. Pre-market high 46.75. That marks a new high for the move. No relevant number at that level. We'll be keeping an eye on Friday's high at 42.75, couple bucks away. Pre-market low below the close, 37.75. Nothing much there. So 9-point range, but really no good levels hit. Crude in the red by 20 cents at 63.10. That got hit off the news of supply increases. Gold, the yo-yo market here, down 5.70 at 12.83.10. Silver back under $15 here, down 9.3 cents at 14.995, and Bitcoin having a quiet morning. Triple D on the opening there. When you say that you're going to buy a stock for a penny, were you referring to Tesla?
Yeah, you got very picking me on Tesla. It's funny. And obviously I got this one wrong. I've sold most of it. I had to sell it when it went through support. This is a stock that I hated forever. And I got suckered by the media. I'll say it right now. I got suckered by the story, suckered by the media. Everybody, I wanted to believe. And there's been a lot of, there's a lot of people bear. People are bullish or bearish, and that is. And that's it. And I want to believe the story. And I still want to believe the story, all the infrastructure they're doing and everything. But, the more and more you look at the stock and the more and more you hear, all the headlines that continue to come out. There was multiple negative headlines before it started breaking support. And it sounds like to me like the story is broken, and that's why I've dumped the majority of the position. I have enough that would be equivalent of an option play now, and it was always the smallest position in my portfolio, and I've dumped even part of that. So it was speculative. It was always speculative. It's a stock like Intel. That's where I get beat up. On Friday, Intel is one of the largest positions in my investment portfolio, and it falls 10%. Unbelievable move for Intel. But the Tesla story to me looks broken. Give us the headlines here. I'm talking against my portfolio, but it looks broken. Give me the headlines.
On Tesla?
Yeah,
All
Tesla.
Right, there are a few. So they snuck in on us Friday at after 5 o'clock that Musk had settled with the SEC regarding his Twitter use. And then this morning we have Tesla releasing a 10Q that says, we are going to take a write-down on our Solar City acquisition of $47 million impairment charge.
Which was a brutal acquisition in the first place. And almost dirty. We talked about that on the show back there because he owns Solar City. So it was like he was using his own Tesla stock to bail out his other stock. So we had talked about that before too.
We did.
We talked bearish for years on Tesla, Joel. And it never went down. And I finally, maybe to this point where it wouldn't go down and the short interest is high. And I was like, well, it won't go down on bad news. Maybe it's got to go up. That's a bad reason to buy a stock because eventually it looks like the bears are winning here now. So, maybe it's going to be the bottom. Maybe I'm just not a good Tesla trader. And I think that's apparent, at least from a swing trading perspective. I do pretty good day trading because I day trade it all the time. But those trading headlines and news, and that's different information arbitrage type stuff. But swing trading on this stock, I've not done well.
So that was the first headline, was that they're taking a write-down on their Solar City deal. The second headline was they will increase Model 3 production to 7,000 cars a week by the end of this year. Third headline was they have enough cash for the next 12 months, I believe is what
That's a terrible headline.
So
that's not what we want to hear, is that you can survive for 12 months with your current cash. So the burn rate's going back up. They fool you with that. What really fooled me too was and I'm not admitting I'm wrong here this morning. What was really fooled me was when they had that profitable quarter. And you think, man, if they can actually start making money, the whole entire bear thesis is gone. Well, whatever they did to make, I didn't break down and analyze the profits that quarter, but obviously it looks like it was a one-time event, and it doesn't look like they're going to be profitable again anytime soon. So they were back to the full cash burn, and the bear thesis is fully in charge. You get, investors like Ross Gerber dumping here. He said over the weekend, he said that he had sold some stock last week. These are long-term Tesla believers. So maybe we're at the bottom. Maybe this story is going to turn around. Maybe this is going to be, I think the cars are awesome from what I've seen, but the cash burn rate is maybe just too high and maybe trying to do too much too fast. I don't know what it was, but from a valuation perspective, it probably never made sense. But now the story is starting to break here. So near through that critical support, I mean, if you're holding on and you were holding on for that support level, it's gone. So I think rallies to be sold in Tesla.
Tesla had 2 profitable quarters recently. The surprising one was October, when they reported a profitable Q3 at the end of October. That was the big surprise. They're also profitable in Q4. And then, as we saw last week, back to non-profitability.
What are your thoughts, Joel? I mean, you can break this down from a technical perspective, and that's what I don't like the most is the technical.
Yeah, it broke down. I mean, there was definitely a breakdown on the monthly charts. That let's just call 245. I mean, that was the area. There was some lows at 242 and 247, whatever. But so I'll use it there. If I'm wanting to buy this on strength, I got to see it get back above 245 and hold 245. On the downside, you just got to wait for some kind of formation here. Like right now, you have a potential double bottom, right? 231.13. Well, you could if it doesn't take out yesterday's low. So 2 key numbers, 31.13. That was a low from Friday, and then 35.14 with the close. And I'll just be looking at those numbers. If it can put a couple lows in there and just, maybe everyone's out of the water that wants to be out of the water on this one. There was, big selling. So if anything, a rally just might be lack of sellers here. But the close, 35.14, 31.13, the low. I mean, a lot of people are probably thinking 200 now. But, we'll see.
I'm thinking it.
Yep. But
I think we were seeing a rally this morning because you had the SEC selling. This was up Friday night. But then they got multiple headlines coming this morning here. There's a lot of people underwater, including myself. Like I said, I have a small, basically equivalent of option position left in it. I'll probably just get rid of it so you guys stop picking on me because such a small position is going to make me nothing in the long run. It's going to lose me nothing in the long run. So I might as well just get rid of it and be done with the stock. And, if it comes all the way back, well, then it comes all the way back. But this is not this stock looks like such an outlier in my investment portfolio because we know I'm a value guy. This is the opposite of a value stock. I've questioned myself what I was doing with it the whole time, and I don't want to take a flyer on, and that's why I took one and I often say I take a full position. I kind of have a dollar amount that I think that I invest in something when I like it. I took 1/4 of a normal investment position off the hop in this, and then I sold some before the earnings report at a profit because I was nervous about the earnings report. And then I sold more when it broke through support there on Friday. So I'm literally sitting with of a normal size position. This is like 1/20th of a normal size position for me. That's why I say it's like an equivalent of an options trade now. So I might as well just get rid of it and you guys stop picking on me.
All right. Well, that'll be the end of our Tesla discussions forever. Moving on to
they don't want more than 5 minutes. We cut it off in 5 minutes. Go to the house mouse.
Yeah, Disney this morning here. Dennis, did you contribute to the opening $1.2 billion weekend gross in Avengers?
No, I did not, but I heard you did.
I did. Yeah.
Is it good?
My takeaway was I broke my own rule. I never go opening weekend, and there's a reason why. Because I hate people, and I broke my own rule, and I'm never doing that again. But it was a good movie. But yeah, this is why I hate going opening weekend. Too crowded, but movie was good. $1.2 billion, probably deserved. And stock is up this morning. You can't stop it.
This is the stock, and we said this about last time. It's like this is the stock that's opposite of buy on rumor. This is buy on news, and it's buy on news again. And I actually, buddy from Bright again, same thing. He's like, we should own Disney over the weekend. It's gonna have a huge weekend with this. Just basic, information like just thinking it's gonna go up because of the movie. And it seems so simple that you almost don't want to do it. So I bought the close on Disney. I'm like, okay, yeah, maybe we should do that. I buy the close on Disney, $139.92. And it trades up like 50 cents after hours on Friday. I'm like, well, we don't know. And so bird in the hand, right? Here's again, FIFO, right? I'm at first in and I'm first out. I'm out Friday night before the movie for my 40 or 50 cent trade or whatever the heck I made. And it's $3 up here now. So leaving all the meat on the bone here. I'm just taking the first bite and leaving all the meat. I got to stop leaving the meat. Get that scalper blood out of me. And it's not only Disney, also AMC having a nice, lift here this morning on predictable news. It's crazy. This isn't like out of the blue. We knew this movie was going to be good. And AMC's up 5% this morning on this news. Big day for the box office. So simple trading winning here. Just simple thoughts.
I was thinking, over the weekend, I was just like, I did try after the Disney had that initial pop up, right? That big gap. The gap had to be filled, right? So I tried one small short position in it, and I'm like, this just ain't working. And then I was thinking, oh, maybe I should just try some out of the money calls. And at this time, it was like 132, 133. I'm like, I should just buy the 140s, and just forget about it. Just break it up. And then like over the weekend, I'm kind of looking at the charts and stuff. I'm thinking, man, gosh, this thing's going to be up because of that movie. Yeah. So then I'm thinking about the 150 calls, and it's just like, when is this thing going to stop? And,
it's unbelievable. Yeah. This has got to be one of the biggest moves ever for Disney. Like in the last decade, this has got to be one of the biggest moves ever. It's up 20% in the last 12. This is Disney. I mean, we talked about it on the show when it was 115, 116, and we talked about we were comparing it to Netflix. And I've been bullish Disney a long time, and I didn't have it in my portfolio, and I should have. And it was a whole Fox deal, lots going on. Yeah, I had it one time, and I sold it back in December when I got nervous about the entire market, which obviously was a mistake. And I didn't buy it back. And and then you look here, and I wanted this not for a day trade. I wanted this in my long-term portfolio. We talked bullish on it in early April when it was like 115, 116. I was like, if this, when we were talking about the streaming service, and I'm like, if they start, you look at Netflix valuation, you look at Disney valuation. I mean, Disney has so many other businesses, so much great content. And I'm like, if they start to give some value to that streaming business, this thing could go up a lot. But I didn't buy it. I didn't buy it in the long-term portfolio. So terrible. I hope some people did buy it when we were talking bullish on it. I mean, we've been bullish Disney a long time. But can I come in here and buy it at 142 now? I mean, now it's like gone. I mean, I don't know if I'd be selling it if I had it. I'd just be, smiling if I had it. But, I feel like I really missed the boat on this one because the stock had been bullish a long time, and I never saw this kind of move coming.
It's just
not this much.
It's just been, and it basically had been dead money. I mean, I'm not going too far back on the month, like on the monthlies here.
Forever.
Since going back to beginning of 2015, you traded beginning of 2015, folks, over 4 years ago, it traded between 90 and with 122. And a lot of that range was even tighter than that. And then it had the technical breakout. But I think it's just a good testament here that, stocks, I mean, it had the technical breakout. And, we talk about technicals and everything, but it's the fundamentals. It's the news. That's what got, it had the technical breakout. So the technical traders were in. But then they just came with the news, and the news of the streaming, and now the movie.
We knew that news was coming. That's what was messed up. It wasn't like it was out of the blue and they announced the streaming service and we took off. We knew that streaming service was coming forever. They didn't buy it though until it was actually announced. Is that not weird, Spencer? We knew Disney was coming out with a streaming service for a long time.
Yeah,
didn't we?
Yeah, we knew.
It wasn't a secret.
We knew, but I think when they announced how cheap it would be, when they announced it would be $7 a month, but
maybe
we knew.
And you think, well, everybody, I'll probably subscribe to them. And kids love Disney content.
You have to if you have a kid, and we knew for a year, right, that it would be out. We knew this would be a huge movie, and so next time we. And
you think about the valuation they give Netflix for their streaming service. And then you think about where Disney trades. And I mean, yes, it's trading, a little more inflated to where traditionally, but if they start giving a valuation on their streaming parts as they give to Netflix, Disney could go a lot higher. So I'm still bullish the stock. I'd love a pullback. I don't know if you're going to get it.
Takeaways.
You're going to get it eventually. I mean, it's just up a lot, but maybe it goes up to 150 and then pulls back to 142, and then I don't know. I think eventually you're going to get some type of pullback just because it's overdone for Disney. But man, that stock is. I wouldn't want to be short of.
Yeah, right. Pre-market high. Let me give you the pre-market high. 142.97. I think I saw here. Boom, boom, boom on the 15-minute. Where did it just hit? 143.10. It did sneak over 143. So 143.10. You pull back a little bit. We'll use that as a target on the upside for longs. Coming back on the downside, it's just been a real steady bid here at the $142 level. And this is since 6:30. So no, actually it's really since the open this morning, since a little bit of a higher open at 4. You could have still bought this thing at 4 a.m. under, well, got to pop right away. But I like 142, 143. Early range here for the house amounts.
All right, the upshot here is next time we know something, we shall all.
We're going all in.
We shall
Yeah,
all
do it.
We shall all join.
What do we know?
It's low hanging fruit.
We shall all join
We
arms.
know Apple's gonna beat, right? We always gonna beat, right?
That's not low hanging fruit.
No, it's not after that kind of
That was
rally.
a joke.
I was joking.
Definitely not low hanging fruit there. You know what this Disney move compares me to, just before we leave Disney, is McDonald's. McDonald's from like 2011 to like 2016 did the same thing. Hung out between 90 and $100. Look at the chart. 85, 90, 100, 100. Could never get through 100. Finally breaks out middle of 2015 to 120, 130. Never came back, and it's doubled since then. I think Disney can do the same thing. I think Disney's doubling here. I mean, the stock's in rocket ship mode, but I could see this in 2 or 3 years as a $200 stock.
And you know what's another thing that kept people out of the stocks, like the whole ESPN thing. ESPN.
But yeah, and how much of that revenue really was? I mean, you go to these parks. The parks are just ridiculously busy. We've talked about Disney forever. I've loved Disney forever. I'm so mad at myself that I wasn't long for this move. Anyways, sometimes you just market timing was off. I should have been long, and I was long in my long-term portfolio, and I shook out on a few stocks in December. And I should not have done that, and that was one that held up fairly well. And I was looking, I was getting nervous, and I just like the market. You're raising a little bit of cash. Maybe I'm a little bit overexposed. Stock like Disney, I should have held on to.
All right, AM earnings, Spencer.
Yeah, before we do that, I just want to get to this Walmart thing real fast. Dennis was right on the money last week when he said Amazon, that Walmart would have to respond to Amazon and their 1-day shipping. And Amazon or Walmart did that over the weekend, tweeting 1-day free shipping without a membership fee. Now that would be groundbreaking. So we're supposed to stay tuned for some sort of announcement on 1-day shipping, which Dennis, you're right, they have to do it. So
they've got to compete. So it's going to put pressure on all of them. And they were down on Friday. And what about that Target move? Holy cow. I mean, that got just ridiculous, getting down to under $75. And I was short Target coming on Friday because of the Amazon stuff. Again, leaving the meat on the bone, leaving too much of the meat of the trade, because I covered at 80. The thing opened at 77 and actually ticked down to under $75. I don't know who's selling Target down under 75 on that news. I mean, it wasn't great news for them, but was it enough to knock 8-9% off the market cap? Come on. It's right back up here, Target 79.35. Now it's actually sets up a little better from the short side up here. We got Barclays upgrading them this morning, Target. So this sets up a little bit better. But let's break down Walmart Target trading here. We have a little bit of Walmart response to the Amazon 1-day shipping. Walmart did bounce. Target had the worst of the days because of that Amazon news, which is unbelievable. But it's bouncing here this morning because of Barclays upgrade. Thoughts?
Well, my initial thought is, and don't tell Amazon or Walmart, but do I really care if I get things? Well, first of all, I don't order from Amazon. Lisa does all the shipping, right? Or all the ordering on that. Do I really care if it comes in a day or 2 or 3 days or whatever? We order, Perry needs dog food. So we order dog food. We don't need it the next day. So to me, it's like a lot of expense. I mean, maybe if you're buying a gift for somebody, but to me, I mean, what's the big deal? If you need something that bad, just go to the store and buy it. And who cares about 1-day shipping? So to me,
what about perishable stuff?
Perishable stuff.
As you get that shipping, and imagine you can start getting the same-day shipping. I mean, can they get to that? Can they get to that level? Because Kroger got hit on this too.
Well, they have same-day shipping, not for everyone, but you can get same-day shipping on Amazon.
You just have to pay up
for Amazon Prime. You can get it. Yes.
I mean, Kroger got hit on this too. And you keep thinking as the shipping gets faster, you start thinking perishable stuff you need quickly. Yes, you don't need dog food quickly, but, you want bread and milk, you want it quickly. So, I mean, you can get that stuff apparently, or where you're saying already, but I mean, Kroger got hit on this. Costco got hit on a little bit too. I mean, shipping is going to get faster and faster. It's not good if you're like traditional box stores because, always the argument, think about it. the argument like to go in and Best Buy is, oh, I can get my product now. I don't have to wait. I can go get it right now. But you think about, if Amazon can bring it to you right now as well, they can get the shipping even faster and faster. I mean, one day shipping gets close. Maybe you don't need to go to the box store anymore. So I just can't see it being, and obviously, we won't know Walmart's redefining it because they're doing the same thing. They're trying to get basically an Amazon business, an online business going. But for your traditional retail box store, it's not good news.
Walmart trading up just a tad here. I'm looking for a gap fill here. That would be 102.83. I have a little area of gap from Friday's high 02.34 to 02.83, and then I'd be keying on the all-time closing high in this comes in at 103.53. And then it was flanked by a 103.52 close. So there's some good levels on the upside here. Let's see if we could fill the gap and then get to that close. The all-time high, just missed it the other day. All-time high, 104.18. Where'd you get to? 104.15. Wow. So there's your double top. That's breaking down the Walmart, the Target. Trading up on the upgrade today here. Gapping you to a gap area. You got to love that. Up to 18 is 79.30.
Call it 80.
Yeah.
Call it 80 resistance now.
At 81.65.67, that fills the gap, and that's the pair of lows from Wednesday and Thursday. So you got some big resistance here, big volume too. A lot of people dumped Target on that news on Friday.
Yeah, that was just silly. That was getting overdone, but maybe getting overdone to the upside now here too. I mean, the thing's back to almost $80. You get a shot in the higher 79s. Maybe take a shot on the short side. I like the setup. I fade. Sometimes I go with the upgrades, downgrades. I'm more of a fader of the Barclays upgrade here now. I think there is issues here for this when they're going one-day shipping. I think it's not good for the big box stores here. I think some of the Target fall was deserved. I just thought it got overdone. But now you come back up to 80. I think this is an upgrade at the wrong time. I kind of like Target from the short side here.
And just remember, retail earnings are later in the quarter. Target does not report until May 22nd, so you still got
lots of time.
Yeah, lots of time in this one. I'll break down to Amazon real quick, though. I hate looking at Amazon because it's just such a hard stock to.
Bang is just hot.
Yeah,
I mean, looking, well, I guess not all of it because Facebook came back down from the earnings, but it's filling its gap a little bit from the earnings. But I mean, Amazon's been going straight up. Google hit new all-time highs, I believe. I still like Google, and I still have my long-term portfolio. And like I said, I still think this is the best stock, and I love Google. So
today, right?
I'd be a buyer of all pullbacks on Google still. I'm sticking with it. I'm in it from basically zero now because I bought it so long ago and I sold some, and I'm actually probably at negative cost basis because I took more out than I put into it. So, but I'll be holding on to my rest of my Google maybe forever.
Okay, real quick, Jazz, thoughts on CL? We got some news on that, right? Colgate Palmolive.
It was a downgrade or upgrade?
It was an upgrade this morning from JP Morgan.
Why is it trading down?
To neutral. They raised their price target to 70. I don't know why it's trading down. It traded up before that. So,
was something else happening here?
No, it's just it's kind of thin volume here, but the fact that it's trading down off
and down too.
Not good at all.
Yeah. What was the news on Friday that took us up? I missed this headline. There's a lot going on. What was the Colgate news on Friday?
They had earnings.
It was earnings. Yeah, that's right. Okay. So, that's a huge pop. Some of these staples, consumer staple stocks, I mean, the KHC has been a dog and of all dogs, and it's started trying to claw its way back a little bit. So that one's different. But some of these consumer staple stocks, I mean, Procter & Gamble, 106 now, Colgate, 71. These things are trading 25 times earnings. I don't know where the P is on Colgate, but last time I looked at Procter & Gamble was like 26 or 27 times. I mean, you're paying up for a company that's really, obviously stable cash flows. Everybody uses their products, but there's not a huge growth engine there. I think there's better places for your money now than these consumer staples. I know they were talking them all up on CNBC, and they've been breaking out, and XLP has come a long ways back, but I think if I was in a lot of these staple stocks, and I almost think I'd be ringing the register here. They've had some pretty good moves. I mean, Procter & Gamble, I always liked it. I've talked about this before, and it gets down in the 70, 80 area. Seems like it's a buy, and it gets up over, when it was getting up to the 90s, it was sell. Now it's broken out, but I don't know. It's a big move for PG, a big move for Colgate. I don't know. Not a fan.
Let's keep it.
Not a fan up here.
Let's look at the close. That was a high close in the move, and Colgate Palmolive 71.30, 71.50 high. So you want it to definitely get green, go green, and stay green. On the monthly chart, 72.61. Actually, there's a pair of monthly highs from 2018, March and April of that year, 72.29, 72.61. So if you're keeping the bullish hat on here, I'd look for resistance in the 72.5 area, but gotta get green here on the session. S&P is only down $1.25 here. Very quiet pre-market trading as of this point. Pre-market high 46.75.
All right, let's do some earnings. Let's talk about Spotify. We had a couple analysts come out on Friday ahead of the report this morning, reiterating their bullish ratings. Morgan Stanley and Raymond James both reiterating outperform and strong buys respectively. This morning, Spotify reporting a Q1 EPS loss greater than estimates, 88-cent loss versus a 39-cent loss estimate. Sales of 1.69 versus 1.66 billion dollars. So a slight sales beat and a bit of an EPS miss in the first quarter. Their monthly active users up 26% on a year-over-year basis.
It's getting a little lift here, and yeah, these things can get hot again. It does have a nice base. I mean, if you've got the bull hat on, I would never want to see us take out the 130 support. That's really where your major support is. We know they had earnings, but we often see earnings reversal, so that's why we just want to be careful there. I'm not saying it's going to do that, but I'm saying if I was bullish, I would not want to own this bull at 130. So the valuation is crazy. It's riding still a story. I think long term, I'm not a fan. Short term, these stories can go on for a while. So I'm not short the stock, I'm not long the stock, but I'm not putting in my investment portfolio at those valuations. Well, there isn't anything. You can't even do valuations when they're losing money. So not a fan of Spotify. Although the service is pretty cool.
Yeah, we're off $4 off that pre-market high, 45.25. So I'll keep an eye on that. You got a little gap fill in here at 142.26, so that could come into play early. But you know, it's got to get that $4 back up to that pre-market high, or else you can roll over here. We're actually at an area 140, 120. That's the lowest level since trading over 146. But I don't know, has had that sell-off here in the 144 handle since the middle of April, and now all these people are getting back to scratch here. So I'd have to lean with you on this one. You know, let's see if they can get it over the pre-market high.
You want to look at some earnings because that's kind of it. There are some other ones this morning, but not too many big earnings reports. If there are any you want us to hit on, let us know in the chat. You want to look at Google real quick? They are reporting after the bell today.
New all-time highs. We'll see what happens. Sneaky. I mean, what's the expected move? Let's go find out the expected move. Give us a breakdown. I'll go look quick.
It's just really kind of been a quiet rally here. I mean, it's just gone up very small ranges, incremental. I'm looking at the GOOG without the L here. Trading at all-time highs here. I had 1273.89, and you hit 1273.87. So just call 1274 and making a new all-time high here. If we can't go 1276, 1277, maybe have a little profit taking ahead of the report because there is going to be a big move off this one, but just quietly leaning out almost to a new all-time high, and then you could just pick the dates, the same on the GOOG out here, but nice move up to all-time high. You can't argue with that.
It's like about $48, quite a bit.
That's
I don't think it's going to move that much. So I kind of like the straddle rate, unless they do something, completely unexpected or say something unexpected or disappoint massively. A 48-point move is a pretty big move. So I think I almost like rating the straddle on this one. But, you get burned doing that too. So you just got to be cautious when you're doing that type of stuff because unexpected stuff does happen in earnings report. And that's why people want the insurance and they jack up the bids on those options. I still own it. Like I said, I'm sticking with it. New all-time highs. No reason to sell this thing into the report.
Yeah, just quiet ranges, just on the way up. It just kind of just grinded its way higher, like $10 range, $15 range. So it's been quiet. And then, as these quiet moves don't last forever. So we'll see what kind of move we get off the earnings report to make a lot of money.
All right, let's go to, let me see here.
Let's go to imbalances. We just
Sure,
got them. I'm
okay.
going to go see myself. I'm just curious myself, so I was just bringing it up, so I might as well talk it. Disney, 106,000 to buy. We know what that's off of. Taiwan Semiconductor, not sure if there's a headline there or not. 120,000 to sell, though, is always significant. That's significant enough to go check out the book and see if there's just one big seller there or if this is marketable order. I'm going to the Taiwan book right now to see if I see that 120,000. Ah, yes, we do see them. So somebody is selling 111,000 shares, basically the whole thing at 43.84, so a dime down. So that's just one person that says I want out. There's also another 111,000 shares go at 44.09. So somebody wants out of Taiwan Semiconductor in a big way to put those types of orders out there. This is New York liquidity, so it becomes active at 9:30. So it's gonna be a tough road for TSM to go up here today.
And
if those orders are real and if they're gonna hang out.
What was that imbalance on TSM?
120,000, and the one seller is 115,000 is 43.84. So it's all one seller. So you can see it in the book when you subscribe to the book. And then I said another 115,000 shares up at 44.09. So these are significant.
Huh? They're trying to wiggle out at 44 is really what they want.
Yeah, they're obviously an institution that says I want out here. So man, that's not the way to do it, throwing those big orders out there. But most institutions don't do that anymore. But when they do it, we might as well take a look. Hershey, somebody was just talking about in the chat, 41,000 shares to sell in HSY, which is significant. It has been on fire there. Talk Hershey's, these are new all-time highs of stock. And we said it, after the KMB move, I got spooked. And I'm like, I don't want to sell Hershey's, at 120. And we was talking that morning because this thing could get silly like the KMB did. And it did. Hershey's chocolates, I guess, this is the Easter bunny. We didn't get it after. We didn't get the rally before. We got the rally after Easter. So call it the Easter hangover, whatever it is. People still eating chocolate. Stock's hot, but it is sell balance.
Should we do the old McDonald's Disney trade on this one? You talk about a sleepy stock going back to the beginning of 2014. The stock is traded in a range between 82.42 and 117.79. Got up there a few times. A majority of the stock, though, has been between 90 and 100 during those 5 years. And then we did have the what was it, a couple years ago? There were Mondelez.
That rumor has surfaced like three times now,
but
and it's never come to fruition. But
yeah, this one, I mean, if you're taking it out of the Mickey D's playbook and you're taking it out of the Disney playbook, I mean, this thing's gone. It hasn't moved.
What's the multiple on Hershey?
I
was trying to bring it up, and for some reason it's not working here right now. What's the multiple on that?
Forward PE of 22.2.
That's high though, isn't it?
Industry average is 19.5. So yes.
Dennis, you're our CFA expert there. What do you think about that? That's a little high.
I missed that point there.
Oh, 22.
That's in the ballpark. That's not that crazy. Where's Procter & Gamble? Let's just compare. These are all similar stocks. These are all your consumer staples. You look at Procter & Gamble's 25. They always give a little higher multiple to these things because the cash flows are fairly stable. You can go and look. Okay, so we just talked Colgate a few minutes ago. 26, KMB's 25. I guess it's on the lighter side. It's a food stock. Some of the food stocks have a little bit lower multiples of 22, but it's not outrageous. It's not outrageous.
All right, let's talk car stocks here.
Yep, let's talk car stocks with our guest today, Zohaib Rahim. He is a manager and industry analyst at Cox Automotive. Going to break down the auto sales report that's going to come on Thursday. We'll talk about GM, Ford, Tesla. We'll be right back in a moment here with Zohaib. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick. Now on with Zohaib Rahim, a manager of economics and industry insights at Cox Automotive. Zoe, how's it going this morning?
Good. Thanks for having me on.
So we thought we'd have you on with monthly auto sales due on the first of every month, and that is in a couple of days here. And we also still have not heard from earnings from GM. So let's just start with macro, and then we'll work our way down here. But from an overall sense, where are we in the auto cycle?
So it's no surprise that we are post-peak. 2016 was the best year ever for new vehicle sales in the U.S. Industry. We've been coming down since then slightly, especially on retail. Last year in 2018, we saw a nice favorable year-over-year bump up by less than 1%, driven by fleet sales increasing. But when you look at the market overall this year, vehicle sales are down a couple of points. Retail is down 4%. So it's been a pretty soft start to the year for especially Q1. When we look at our internal forecast and what we're kind of expecting for April, we do see that we're going to see a nice cooling off from March. We do see volume down 15%, or we're projecting volume to be down 15%, as well as SAR coming in at 16.9, a lot lower than the 17.5 we saw in March.
Any expectations for the monthly motor vehicle sales report later this week?
Yeah, so we think April's forecast is going to come in down 15% year over year to about 1.37 million units, which would bring that into a SAR of 16.9 for April. So we're looking at softness, especially on the retail side, but we could see a stronger boost to fleet sales that we have been seeing all year, driven by commercial and rental fleet sales.
Oh, but what about from specific automakers?
Oh, from specific automakers, yeah. I think we'll see a little bit more of a mixed view, as we have pretty much all year so far. So we're looking at GM coming in not as weak as we could have seen. We're looking at GM overall as an OEM down. Look on a year-over-year basis about 1%, so not terribly too weak. Ford, our expectation is down about 7% on a year-over-year basis. Toyota more in line with GM, down 1%. So no one really expected to drop significantly outside of our expectations for Ford, but when you look at some of the other Asian brands, like American Honda, down less than 1%. Nissan, we're actually looking at them being up almost 20%, but a lot of that's just driven by weakness that they've already had this year, that others are starting to face now, as well as kind of their movement away from strong fleets and strong incentives.
We're on the line with Zohaib Rahim, Manager, Economics and Industry Insights at Cox Automotive. We got to talk about a company near and dear to us here at Dearborn, Michigan, Ford Motor, making a move it hasn't made in years. A nice beat, 44 cents versus 26 cents. Surprise EPS by nearly 70%. Didn't need that much extra revenue to do it, just a slight revenue beat here. So Ford, dead money, years and years and years, the greatest bull market of all time. One move. Is this a game changer here for Ford? And also you look at some of these other stocks that are just waking up, different industries here. Talk about the Ford report. Someone else in the chat mentioned about the purchase in Rivian. I know what they're doing in downtown Detroit here. Stop me from being so bullish Ford.
No, I'm as surprised and impressed by their Q1 report as anyone out there. I think this gives, if I'm Jim Hallett, this gives me a lot more breathing room now. They're strong on their guidance that 2019 is going to be stronger than 2018. So I definitely like the report. I definitely like the numbers. And when you even look at their overall numbers, their net income was down, sure, but that's because of restructuring costs and one-time charges, right? So overall, the numbers were very solid. I do think that they're going to see pretty nice improvement as the year goes on. They're focusing on, I think, what everyone at least needs to be focused on now is maximizing the pricing power of their vehicles, cutting down costs where possible. At least in the case of Ford, it was shutting down in some of the markets, as well as shutting down specific products that aren't making them any money, right? If we are post-peak, the focus needs to be on optimizing your portfolio mix, optimizing and maximizing your prices. And I think Ford has definitely taken the right steps in doing that. Again, we saw the great numbers for Q1. I think the momentum and the ball is in their court right now. Hopefully they see the continued improvements in Q2 and Q3 with the new products coming out and just kind of seeing where their pricing is. So as long as they continue to be pretty well behaved on incentives and focusing on their trucks, I think they're in a good spot.
And any insight, to the train station there? They paid $150 a square foot for that. Just an outrageous number, but to acquire it and make it for their bases for electronic vehicles and testing. You have any insight of that? That was a big investment here in the Motor City, being part of the Motor City comeback. Comments on the purchase of the train station and plans going forward.
Yeah, I think it's more than just the train station. I think it's just their vision for the future. It's not just producing vehicles, but it's the stuff on the inside. It's drawing talent away, not just from engineers but also from the software side and kind of focusing on what the future of the car looks like, what's the future of the industry. I think they're making the great and smart plays with the Rivian investment also. Investing in the future. And I think Ford is definitely one of the top OEMs right now that's looking at the industry and thinking to themselves out loud that what's going to happen in the next 10 years is definitely going to change the industry, and they want to be on the forefront of it too. And I think the overall Detroit's getting a lot of investment. I think it was Waymo last week that also made announcements that they're going to be investing in the area. So Detroit seems to be coming back up. It's probably going to be a little different than the Detroit that we all knew and heard about 50 years ago when it came to automotive. But the next 50 years, Detroit still seems to be, the forefront and the center of what happens in the auto industry.
All right, you really open things up here by talking about the future here, and Tesla here. We'll talk to this stock. Just talk. Put your Zoe thinking cap on. 10 years into the future. I mean, we've had all these talk about autonomous vehicles and driverless cars and everything that's going on. I don't know if the infrastructure is there yet, but just put your thinking cap. Who's going to be the leader here in 10 years? Is somehow Tesla going to rebound from get out of the doldrums here? Is Ford making some big moves here? And what do you think? You think you'll even have a car in 10 years?
So I think I'll still have a car in 10 years just because of where I live in Atlanta. Cars are definitely a focal point here in the city. But 10 years seems to be very different, right? You could see now these robo-taxis popping up. I think they're going to be a little bit more geo-fenced. I don't think it's going to be a free-for-all autonomous world that we see in the movies, because I think 10 years is still not enough time for all the investments and infrastructure to be in place for a suburban and an urban environment supporting autonomous. But so maybe it's a little bit further out than that. But I think, the OEMs are making the right investments. Now it's whether they kind of continue to focus on those investments and kind of grow them, right? Because it's not going to be cheap. This will be capital intensive. This is going to drain their bank account. It's going to require a lot of leverage. So if you can't borrow money over the next 10 years, you might be one of those people that kind of gets phased out when you think about being an autonomous player. And that's when you're going to have to start partnering with other OEMs, other brands. And I think that's what we're seeing now is that a lot of these manufacturers currently are seeing that this is not easy. And they're looking at partnerships. They're looking at making sure their costs of what they're putting in are lower. I think Tesla's maybe is going to have to start thinking about that is how can they partner with someone.
There you go. There you go.
Right now.
I said that a while ago, Zoe. I was thinking, Ford's idling factories, right? What does Elon Musk need? He needs to produce cars. He needs to make money. And now, with the report that he has, the rumors are out there, everything, this company, it's on its heels, breaking down through major support, 3-4 year support here. What are the options for Elon Musk and Tesla? And who would be the most likely? Is there a suitor? And if so, who would be the most likely suitor for Tesla Motors?
That's a good question. I think and I think in this case, it's the $50 billion question. I could see maybe a little bit more partnerships with the opening of China and what they're doing on the electric vehicle side for sure. China's the largest EV market in the world. They have more EV companies out there than I think the rest of the world has brands combined, if I'm not mistaken, with over 500 EV companies registered to date. So I think I could see China partnering with Tesla, maybe even Volkswagen kind of partnering with Tesla. Tesla, again, doesn't have to be completely bought out, but if the focus is, moving Model 3 into more of a robo-taxi fleet and people not actually having to own their Teslas and they kind of just use them as a mobility service, Tesla, I think in that situation would definitely need partnership because you're going to need to ramp up production dramatically to have a fleet of robo-taxis available for consumers right now. And if that's the case, that requires a lot of capital. And I think that's going to be Tesla's biggest bullseye and biggest target and focus over the next even just 2 or 3 years is how much more capital can they get to ramp up this production.
All right, we have been on the line with Zohaib Rahim, Manager of Economics and Industry Insights at Cox Automotive. Zoe, thanks for the insights and have a good rest of the week.
Thank you, you too.
All right. 8:48 now, Joel. Any word here? Any change?
We went green, and then we're not green. We're down 2 1/4 here, 39.5. So we're trying the settlement that closed at 41.50, shaping up to be pretty big here. Tesla has gone red on the session here. So once again, popping up news and fading. Now trading red. Got to keep an eye on the low. What's up, Triple D?
No, I was going to say, we talked about Tesla 237, and, that's when we did the bearish rant there this morning. It's broken here now, and I think rally's still to be sold. So that rally was quickly sold. I think it's going to have a bad day again.
Disney fading, not hard, but still up 224. I mean, that's a lot of profits for people that have had this thing over the last few days. So a little bit of a fade off the pre-market high, still up 228 at 142.20.
Lots of other stocks here in ratings land, which we have not got to. Give us some highlights here, Spencer. I see Adobe up at Morgan Stanley. Quiet period's over for TradeWeb. Just a ton of ratings here. What were the analysts saying over the weekend?
We have Target upgrade at Barclays. Let me pull up my calendar here so I can get them all in better view. So, excuse me. Target upgrade at Barclays to overweight. Price target raised from 85 to 115. We have American Airlines upgrade American Airlines and Sprouts Farm upgrade at Deutsche Bank, both from hold to buy. Adobe upgrade at Morgan Stanley to overweight, raising their price target from 282 to 340.
What a stock that's been.
We talked about the Colgate-Palmolive upgrade at JP Morgan. AbbVie upgrade at BMO Capital from underperformed to neutral. And those are the biggest upgrades. Downgrades that I'm seeing this morning, OLED and Coherent downgraded Susquehanna both to neutral. Intel downgraded Argus to neutral. American Express downgraded UBS to neutral. Triple M downgraded Gordon Haskett to neutral. Any sells this morning? Not really. Any big ones? Sprint downgraded to neutral. Raymond James. And Adarco downgrade JP Morgan to neutral. So mostly just downgrades to neutral this morning. Let's go back to the upgrades. Let's look at the chart of Adobe here.
ADBY, Adobe.
ADBY, what? ADBE, we'll correct you on that one.
I'm sorry. Adobe. It sounds like a Y, right?
It should be a Y. We'll give you a Y. What it should have been.
All right, I deserve that one. Trading up here 4.5 sticks at 286.46. What can you say about this one? New all-time high by a large margin. That new all-time high was made on Friday. This got upgraded. Someone upgraded this today. Wow.
Stock's just been a monster here
I don't know.
since
287 is a target. 287.01. A grand total of 5 shares traded at 287 and 287.01. So not really much to price discovery there. Some volume trading here a little bit lower, but I'll keep an eye on 287. If you're looking for a fade of this one, boy, you got to get all the way down to the top of the range from Friday's 282. Not out of the question here, just because it's up on such light volume. Dennis, any comments on?
This is in rocket ship mode. I mean, why do you want to be short a stock that's making new all-time highs? So, am I chasing it up here? Probably not, but I definitely don't want to be short a stock that's making new all-time highs. Everybody wants to call the top and stop the rocket ships a lot of times, and it's hard to do. So, trend is your friend. The trend's been straight up all year. You get an upgrade here. I mean, this could be $300, not today, not tomorrow, but very soon. This could be a $300 stock. The only concern here about some of the stocks is we have seen a lot of rotation lately, and we've been talking about the value trade coming back into play. I mean, Adobe, and where's the multiple on this thing? It's obviously, it's not a value stock at all, but it's 52. So, it's not like some of these, cloud stocks that are trading 80 or 90 times. But it's still 52. So you got to think about that, what kind of valuations you're paying for some of these stocks. I do think at a certain point, some of these things are getting overdone. But right now, trend is your friend. So ride the trend until it ends.
All right. Quick, Ed Parker. Next stop, Boeing, 365 or 400. Well, it's closer to 365 here. It's trading down 229. Doesn't did you mention on the pre-market show that someone was speaking today?
Yes, the CEO of Boeing is giving a press conference at 10 a.m. Eastern time. I think it's the first press conference he's given since the 737, I guess, became a story a few months ago. So, and remember, they did say that they said in their earnings report that they would give guidance at a later date. Well, that could be today. So watch out at 10 a.m. for statements coming out of Boeing.
I think I'll just take the old stance. Well, is he going to say something bad? Like what are the chances? I mean, that's what I'm like. When they waited this long, there's been all the news. I mean, I don't know. I wouldn't want to be. It's going to move both ways off. It's still just a trading range. I mean, until you get stopped out buying at 365 or 355, that has been the trade, and now it's really getting tight here. On the upside, I mean, we did get to 384 and 384 at the end of 384.80 at the end of the week here, but you're getting, I don't know, it's just winding up and getting tighter and tighter here. So trade range 365 to 400. Doesn't spend much time at either place, and now just grinding in the middle. So we'll see if the statements today move the stock, but I would definitely be on the lookout when that happens. You said that's 10 a.m. Eastern. That's interesting. The market's open too, so we'll be watching.
You're in the middle of it though, so are you going to be able to take it out of the trading range here? Probably not on this. I don't know if I see it moving 20 points in either direction. And then the trading range, you're exactly right. 360 to 400. Every time it gets up near 400, it's found resistance. And this 360s, we know we found buys. We've been talking about it. We talked about it last time we got down there. I mean, it's support is support until it's broken. If it ever starts trading 355, then it gets interesting from the short side. But as long as it's above 360, the bulls are still somewhat in control here.
All right, quick report here. QSR trading in the red here by 246.
I guess no one's buying any more Tim Hortons. I don't know. That
was Spinner. Joke from the chat. But...
Oh, really? I didn't even see that.
Oh, Spencer didn't see that. So two people thinking the same thing. Picking on me again.
Making the same
joke. I'm sorry,
joke.
Dennis.
They're both, everybody's picking on me. They don't even cahoots. They're all just thinking the same thing.
Dennis, I'm sorry about that Tesla comment at the beginning of the show.
Now I get picked on Tim Hortons.
I'm amending my joke.
I'm like the anti-Tim Hortons guy. I've joked that they've thought of toss me out of Canada because I don't go to Tim Hortons enough, but I don't drink coffee, so that's why I'm not a huge Tim Hortons.
I'm amending my joke to Burger King. There, Q1.
Yeah, what's up with Burger Kings? Can I just ask people? It seems like there's a lot of Burger Kings closing.
I don't know.
I mean,
they're all closing in Canada.
Really?
In Canada, it's a nightmare.
Really?
Out west, they got those Whopper bars and stuff. Maybe they're nicer out there. I'm not sure, but in Canada, I was like, I ate at a Burger King like a year and a half ago, And I was like, when did it become this bad? Is what I was thinking. The Whopper, maybe it was just a bad experience for whatever reason, but I was like, holy cow, my McDonald's experience with my kid is so much better than my Burger King experience with my kid. I mean, they did give him the little crown, and that was exciting for the boy, but at the same time, the food was not good. The play center was not nearly as fun as the McDonald's one. McDonald's just feels like a cleaner, like classier. Like, I don't know if cleaner is the word. Management's
they've
good,
upgraded,
clean, but just updated.
Here's what you're looking for. They've updated the atmosphere to fit the fast casual theme, like Chipotle and Shake Shack. They've upgraded their look. They've upgraded their look. I don't know the last time.
Burger King never did. So it just seems old, and I don't know. I'm just not a fan.
All right. Well, QSR reported this morning EPS 55 cents, missed by a penny. Sales 1.26 versus $1.15 billion. So a sales beat in the first quarter. They are, as you can see on the chart, trading down. 4%?
Yeah, it's
but obviously they own a lot of restaurants. I mean, if we just go and look and break down what they own, let's just quickly do it. I mean, we joke on Burger King, Tim Hortons, but QSR restaurant brands, they just own a ton. So it's not just these ones. So break down the technicals, Joe. I want to see which ones they own.
It is. It took a big hit. It's recovered. It's only down 266 now. Pre-market low. It looks like someone just wanted to get that 90 share print there in at 61.91. That's the low. So really don't make that a valid low. I will say longer term, 65 breaking down here through 65, multiple lows at 65. So now a $1.20 rally. That's going to be your major resistance. On the downside here, you had three big up days. You had a low at 64. We're below that. So I'll focus on the two other lows that you have here. One at 63.78 and then one at 62.77. So the 63.78 is going to come into play right away. And then we'll see what happens at that 62.77 low. But really like the resistance here back up at 65. That looks like I don't want to call it a major breakdown, but when you hold support for almost the entire month and then you break through it, let's see if it can regain $65. Spoo's back. Trying to go green on the session. Something just happened here in the financials. Anything, Brent? I just see I just saw a pop out of Bank America, and I saw the spider XLF.
Yeah.
You see
they're moving up.
Is there a buying balance here in Bank America or anything?
No, but we are seeing the TLT really getting whacked here right now. So not really whacked, but it's down. So I'm not sure. I do see the XLF. I see what you're talking about here. Joel's just starting to lift here a little bit. And I do see Bank America lifting here in the pre-market too. No buy balance in Bank America here yet. It's 140, but this is multiple bids. So it almost looks like there is some headline here. I'm just trying to go grab to and see if there is a headline. If anybody else has it.
No,
is there a headline in the banks? Because I do see some movement in Bank America. You're right.
I've just been hawking this, the XLF and this Bank America. The Bank America had all those highs. Do you remember we talked about this last week?
Yeah.
Couldn't get through 30 and a quarter.
Looks like it's trying to try right now.
No, it took it out on Friday, but pulled back here, and now there's some good news coming.
It gotta be. It's really trading active right now. It just picked up 30.50, so 460,000 shares at 30.50. So you're gonna have and there's stuff before that too. So call it 500,000 shares you got to chew through here at 30.50. So people who buying it up here, unless there is a headline, it'll have trouble. But maybe there's a headline that we don't see here yet. I just was just trying to look quickly. Obviously, we're on a live radio show, so if you do see the headline,
I don't
see a headline.
No, me neither. I'm looking all sorts of places. I don't see anything. So.
Well, somebody's excited here right now, just paying up a little bit. Not that it's a huge move, but it was trading down and it just went to the green. And there's multiple bids up here, so interesting. It's still 125,000 to sell from imbalance land, and like I said, there's huge selling. There's huge size up here, 30.50. So that looks like that's the first level of resistance to me.
Okay. All right. Well, we got things going here on money. One more.
We got distracted though. They Restaurant Brands International (QSR) also owns Popeyes. Dennis, I don't know.
That's what I was thinking of.
Okay. Yeah.
I love Popeyes chicken. I've always been a big fan of Popeyes chicken. That's good chicken.
All right. So, that's good chicken.
Maybe that's the brand that pulled them up. I'm not sure. Tim Hortons is always jokes all you want, but I mean those things are all packed in Canada. So the Burger King's probably one of their weaker brands. I'm not sure. I never broke down the financials there to see their strongest ones. And the Burger King I'm not a fan of, but Popeyes is good. And my wife loves the Tim Hortons coffee. So they've got a good business there with Tim Hortons. And I think Popeyes is pretty solid too.
All right, that'll be it for today's show. If you missed any part, you can catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Don't forget, you can meet Joel and Dennis and myself at the Benzinga Trading Summit, well, among other people, of course. Benzinga Trading Summit, June 20th in New York City. If you go to benzingatradingsummit.com, enter the promo code PMP15, you'll get a 15% off your ticket. You'll be able to network with people. I know Joel and Dennis are going to be presenting some their trading strategies. Other traders will be there as well presenting their strategies. So to learn more, go to benzingatradingsummit.com. Again, the promo code is PMP15 for 15% off. Thanks to today's guest, Zohaib Rahim. Thanks to all of you in our chats. Please remember, all the information from our show is for informational purposes only, not meant to be investing advice. And before we go, Joel has one quick thing.
I'm just going to say I'm working on one hell of a lineup for that. I'll tell you. I'm getting excited about it. I don't want to release any.
Joel's working on the lineup.
Joel's working overtime.
There is some names that are already released. Who are some of the other names that have already been released? Obviously me and Joel.
That's all you need to say.
And Spencer.
Yeah, right. No, Joel would know who's
John
going to be
there. And Tim.
Yeah.
Oh, Peter Schiff will
Peter
be
Schiff.
there. Yep. Chris Irons, aka Quote the Raven, will be there. Matt Swaden, Geo Investing will be there. So a few names, but working on.
Lucci, I saw him on the list there too. We used to have, we haven't seen Lucci on that in a long time.
We'll have to track him down. So okay, Spencer.
All right, that'll be it for our show today. Everyone have a good rest of your day. We will see you on Tuesday.